try and assess the value of Tesla, and that's how they get to that 780 price target.
Hey, what's up, YouTube? It's Kevin. Welcome to another exciting episode of Tesla Today. Got three short videos for you to watch. Exciting stuff coming up for Tesla. So overall, we look at today's close. Tesla hit and closed at an all-new record high, $593 a share. So we're getting closer to that 4,000 ARK base case that they said would happen in 2024. We're only 1,000 base points away from that ARK case. Overall, the volume was fairly light. 37 million shares were traded today. Brought the market capitalization for Tesla to $562 billion. And then after hours trading, Tesla was only down a whopping 21 cents. So strong position there for Tesla. And like I forecasted in my video yesterday, if you watched it, I do believe that Tesla will close over $600 a share by the end of the week, which is by the close of business tomorrow. Then going to next week, I think we'll see a steady rise throughout the week. And the week prior to inclusion, I expect to hit between $650 and $700 a share prior to December 21st.
How do you value it? David, you know some of these companies like Tesla. How do you value it?
I don't know. When it comes to Tesla, I don't know. Let's do a DCF valuation, assuming 15 million units in 2040. And therefore, after that, we have Tesla entering perpetuity growth of 2.5%. That's Goldman Sachs' estimate of how you analyze and try and assess the value of Tesla. And that's how they get to that 780 price target from 455.
You feel his pain?
Yeah, he downgraded the stock in June. By the way, you can't blame anybody for downgrading, and when it comes to Tesla, I don't think it was. But it's been up 192% since the downgrade versus the S&P, up 22%, which, by the way, has been pretty darn good. That's since the middle of June when Goldman made the mistake of downgrading Tesla, only to upgrade it today on better long-term sales outlook and margin expansion. Jim, their EV adoption case scenario keeps going up. They call for 26% global EV adoption by 2030, 40% in 2035.
I know. I mean, it's painful because then he had to stretch it to the EV, more adoption, the battery, the margins getting better.
And then also full autonomous.
Yeah, but wouldn't it have been better to just say, listen, he did say that I got it wrong. That was, I mean, it is a mea culpa piece.
Yeah.
But at the same time, I think that what the people who read it make judgments about his credibility going forward.
Speaking about the credibility of these analysts, it's really not their fault. I mean, some of them are ass clowns. Yes, we know that. But a lot of them were taught and have multiple companies that they have to analyze. None of them were taught, other than the traditional automaker, to do the ICE engine, look at production volume, and you're just dealing with cars. In fairness, none of them were dealt to go, hey, here's a new technological EV company that does energy, solar, insurance, robo-taxi, full self-driving, hardware, software. They just are overwhelmed with Tesla, and they don't know how to evaluate the company. That's why they're like the weather people. They go, yes, upgrade Tesla, because they did it, and I don't want to be left behind. So here comes my upgrade. And that's going to continue this leapfrogging upgrade process, which is great for our stock. Typically, when we see a fairly reputable institution like a Goldman Sachs, if you put it in that category, come out with an upgrade, it's taken seriously compared to a no-name brand like CFRA.
All right, $780 price target is a street high, as you guys have been pointing out. And just to put it in perspective, the average analyst target price currently monitored by analysts over at FactSet is $406. So just to give you an idea of just how much Tesla has run up. But take a look at some of the driving forces behind that Goldman upgrade. First of all, they are talking about the battery adoption side of things accelerating. That's a key point for that upgrade and that move to $780. Also, their energy and self-driving business, positive catalyst there. And a big key one there, margin expansion expected in the future as well. So that's the Goldman call.
And I think this is an important note on the upgrade. So let's cover these three things real quick. We talked about battery adoption acceleration, going from the 2170 cells to the 4680 cells, the new cells that'll roll off the line, not just in Fremont for the Cybertruck, but also in the future out of the Giga Berlin for the Model Ys, those 4680 cells. It's really a huge future of what we're talking about during this EV revolution and Tesla. The energy, when it comes to, we haven't really even touched on energy, not just the solar roofing and the mega packs, the storage, but we're also talking about the future of AutoBidder, right? Being able to actually control that energy and the flow of it. That's going to be, could be as big a business that Elon thinks will be as big, if not bigger, than the auto industry itself with Tesla. And of course, the full self-driving. I mean, what a huge catalyst that could be here. And if we get that, and I think we will from Elon, say December 14th, December 15th, he rolls that out right before it goes into the S&P 500 inclusion. We're going to see a frenzy, seeing that full self-driving beta go out to the wide masses. That could have a huge effect on our stock price up, including S&P 500 inclusion. And then finally, the margin expansion. You know, the typical automakers say, oh, the best in the industry is Porsche, 16% margin. Well, Tesla's beating them right now. They're at 20% margin. They're looking at economies of scale and that vertical integration, increasing that margin from 20% all the way up to possibly 23 to 25% margin on some of these vehicles. I think the margin on the Cybertruck is going to be a huge moneymaker. No paint. You got the cold rolled stainless steel body, very few moving parts. The margins and the economy of scale there is going to be a huge time savings, and it's going to be a big moneymaker. Huge profits coming out for Tesla and our money.
Call on Tesla. It's not the only notable call we've seen. There have been a lot of bullish commentary coming out of these particular analysts, again, on Tesla. Adam Jonas, back on November 18th over at Morgan Stanley, said Tesla is on the verge of a profound model shift from selling cars to generating high-margin recurring software and services revenue. Overweight rating at Morgan Stanley. The next one, a little earlier on, Alexander Potter, over Piper Sandler on October 21st. After solid execution in the third quarter, Tesla still deserves a must-own status. So positive commentary there. And then to kind of round it out with something a little bit more negative, this is Rajvindra Gill over at Needham. Basically on October 12th saying we've never seen a stock rise that much that fast with such little regard to past fundamentals, if you're looking for a little bit of balance with regard to the views. Now, again, to start the year, Tesla was roughly a $75 billion company. Back here, $75 billion, and we just showed you near $550 billion market caps now. And just to put some of that in perspective, if you look at the biggest companies in the S&P 500, which Tesla will be at one point in just the next few weeks, you take a look at Apple, you take a look at, say, Microsoft, you take a look at Amazon, those particular moves there, to put it in context, Apple, $2.1 trillion, Microsoft, $1.6 trillion, Amazon, $1.6 trillion, Tesla would be roughly the number 6 stock in the S&P 500 if it were to go in today. So, Carl, an interesting look at that big Goldman call. There could be more upside ahead if anything happens here with some of these big calls, but still, caution abounds when it comes to a stock that's run that fast. Remember, Carl, $75 billion was the market value to end last year. $550 billion now. It's been a huge ride.
I think this is the first time since I've been tracking Tesla I've actually seen out of the 36 analysts that cover Tesla, 14 rating with a buy right now, which is insane. Usually it's 14 to 18 on the sell of Tesla. So to see most of them jump on the bandwagon now for buying Tesla at this is kind of it's nice to see. It's really nice.
Welcome back to Fast Money. Another record day on Wall Street with the Nasdaq closing at a new all-time high. And our next guest says there are 3 high flyers in this record rally that could come crashing down. Class is in session with the Dean of Valuation, Aswath Damodaran, finance professor at NYU. Professor, always good to see you.
Good to be back.
Let's start off with Tesla. And before you actually dive into your valuation analysis, at what point did you think Tesla was not overvalued? I sort of want to get that out of the way.
I sold it. I mean, given the stock split price, I sold it at 120, and you can see how much money I've left on the table. But at this point, I don't even try to value Tesla. I just try to reverse engineer from the market cap what has to happen for that stock price to be justified. And here's what I see. I see a company that's being priced to deliver more than $500 billion in revenues with margins like a software company. Now, there are some who believe that that can be pulled off. I'm skeptical. I mean, to me, that if they can pull it off, that is something that no company in history has ever done.
See that? Even NYU professors of finance can be dead wrong. Sold his Tesla stock at $120 a share, missed out on a huge upside. We can all make that mistake, so I'll forgive him for that. Him not being able to look forward and seeing Tesla as an actual software company is a mistake. Let's just simply talk about full self-driving in the beta edition. That's huge software. Money comes with data. Tesla is the only company out there that has over 14 billion with a B miles logged in autonomous driving. That's worth a huge amount of money by itself. We're not even beginning to talk about the other software. We're talking about management of the auto bidder system, all the energy concepts, all the software that goes into making the app run not just with a car, but also with the solar roofs. Think about the future technology now as we enter 5G as well. This professor doesn't even have the common foresight to see that, hey, you know what? Your Model Y, as you go to the mall to go shopping when we get out of this COVID crap, or to the restaurant after we get out of this COVID crap, is going to actually be able to connect through 5G with other Teslas that are in that area and actually identify available parking spots for you before you even get within a 2 to 3, 4 minutes of that spot being there. They're all going to be able to interrelate, communicate, talk to each other, and use each other's cameras to see. It's going to be absolutely amazing. Think about just traffic congestion. Think about a Tesla that's 2 miles ahead of you that's able to report, hey, there's been a crash. You should take another alternate route. The possibilities, as you see, as we're starting to go down that rabbit hole, are endless. That communication, that 5G, that software is so, so important. And that's where the money's really at.
So I'm just looking at the market cap and saying that is a huge mountain you got to climb to justify that market cap.
So when you said this, a software company, some might argue, bulls might argue that the software, the intellectual property component of this company is much greater than it being just a hardware company, an auto company. The miles driven for the autonomous driving aspect of the company should be valued much greater, and so maybe you can get to the valuation there. If you imputed a higher valuation for those parts of the business, can you get anywhere near where it's valued right now?
See, I think there are pieces, and this is why I think Tesla, you can get to different valuations. There are pieces of the story. Each piece is justifiable, right? I mean, there is a part of Tesla that's software. For instance, a car goes with software, and they've talked about selling the software separately. The question is whether you can get margins that are 15, 20, 25%, which are software margins, with the revenues that a traditional automobile company has delivered, $500 billion. So I think it's combining the different pieces of the story that makes me uncomfortable, because those pieces usually don't go together. I mean, think of Microsoft, 22% margins, but $130 billion in revenues. I mean, we're talking about Tesla having 4 times as much revenues and margins like Microsoft. That's going to be a tough hill to climb.
So as we're wrapping this up, I want to talk about full self-driving and those software margins. So let's just say, it's not even hypothetical, Tesla so far has made 1 million Tesla vehicles so far. If there's a take rate of only 20% out of that million for full self-driving, like I did before this last price went up, I went and talked to the wife and spent the extra $5,000 to get the FSD package. I already had $2,000 for the autopilot back in 2018 when I bought my Model 3, and then I just spent an additional $5,000, right, to upgrade to the full self-driving. So the 2 plus the 5, that's $7,000. But I'll even be more conservative than that. So let's just say 20% take rate of the million Teslas that are out there on the road decide to upgrade to the full self-driving. That's what? 200,000 vehicles times $5,000, once again being low, being conservative on that price, average price of $5,000 a piece, equals $1 billion with a B dollars of revenue in software. And those margins are 80 to 90%. Wow. That's it for today. Thanks for watching. I appreciate your support. I'll see you again tomorrow. You've been watching Tesla Today. And hey, please consider subscribing to the channel. I can use it. Thanks.